Get ready for a massive market surge because AMD and Intel have both smashed their all-time highs. AMD shares are soaring, climbing to roughly $443 and pushing its market cap to $720 billion, all thanks to explosive demand for its EPYC processors and Instinct GPUs driven by agentic AI adoption. AMD CEO Lisa Su just confirmed that agentic AI is fueling tremendous demand across the entire compute market, signaling an incredible acceleration in AI infrastructure spending. This is huge news for the entire semiconductor landscape, and we dive into what this means for your portfolio right now.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at the memory chip sector, where investors are seeing massive gains as data center spending explodes to power artificial intelligence applications. Micron stock and Sandisk stock have both rocketed to record highs amid this spending frenzy. We'll explore the strategic partnership between NVIDIA and IREN, which is set to accelerate the deployment of up to 5 gigawatts of AI infrastructure, showing just how critical memory chips are in this new computing era. Now, let's talk about the broader market picture. The U.S. stock market opened higher today, fueled by strong jobs data and optimism surrounding easing geopolitical tensions. The Nasdaq Composite hit a fresh record high, surging over 1.2%, as semiconductor and AI stocks rebounded strongly, showing investor confidence is returning despite global uncertainties. We'll break down how these economic indicators are shaping the current environment. And finally, we look at the best AI chips to buy right now for 2026. Gartner projects the semiconductor industry revenue could grow by 64% in 2026, and memory chip spending is set to jump dramatically. We'll examine why Micron Technology and Sandisk are poised for exponential growth, and why Intel's turnaround strategy is paying off with surging demand for its server CPUs and custom AI processors. Stay with us, because this is the deep dive you need to know before the market moves again. AMD and Intel have both reached all-time highs as surging demand for agentic artificial intelligence infrastructure propels chip stocks. The rally is driven by strong performance in data center growth for AMD and renewed investor confidence in Intel's manufacturing comeback narrative. AMD shares climbed approximately 9%, reaching around $443, which elevated its market capitalization to approximately $720 billion. This surge followed a stronger-than-expected first-quarter report, where the company announced $10.3 billion in revenue, a 38% year-over-year increase. Crucially, data center revenue jumped 57% to $5.8 billion, fueled by high demand for AMD EPYC processors and continued shipments of AMD Instinct GPUs. Following the results, Wall Street analysts have become increasingly bullish, with at least 20 brokerages raising their price targets due to AMD's expanding exposure to AI infrastructure demand. AMD CEO Lisa Su highlighted the accelerating impact of agentic AI on the compute market, stating that agents are driving tremendous demand in the overall AI adoption cycle. Intel's stock also experienced a significant rally, supported by the belief that AI inference and agentic applications will revitalize demand for CPUs while bolstering the company's foundry ambitions. Intel reported first-quarter revenue of $13.6 billion, up 7% year-over-year. Intel CEO Lip-Bu Tan asserted that the CPU is reasserting itself as an indispensable foundation of the AI era, arguing that AI services are creating new requirements for general-purpose compute. Further fueling Intel's momentum were several strategic developments. Reports surfaced regarding early-stage talks between Apple and Intel, Samsung, to produce main processors for future devices in the United States, causing Intel shares to surge to a record high before extending gains. Intel's April rally was also bolstered by expanded partnerships with Google for AI infrastructure, including custom processing units, and plans to join Elon Musk's Terafab AI chip complex with SpaceX and Tesla. Additionally, the U.S. government's 9.9% stake in Intel has reinforced sentiment regarding the company's turnaround efforts, following the announced $8.9 billion investment in August 2025, aimed at supporting domestic semiconductor manufacturing. This move propelled Intel's stock up 114% in April, marking its best month in 55 years on the Nasdaq and re-establishing it in the center of the AI trade. Memory chip stocks experienced a significant rally on Friday, driven by escalating spending in data centers dedicated to powering artificial intelligence applications. Both Micron Technology and Sandisk stocks surged, reaching new record highs. This market surge follows a major development late Thursday when AI chip manufacturer NVIDIA, announced a strategic partnership with AI cloud service provider IREN. This collaboration is aimed at accelerating the deployment of up to 5 gigawatts of AI infrastructure. The increased demand for this infrastructure has placed memory chips, including dynamic random access memory, at the forefront of investor interest. U.S. stock markets surged on Friday, driven by robust jobs data, easing geopolitical tensions, and a significant rally in artificial intelligence chip stocks, pushing the Nasdaq to a fresh record high. Wall Street opened higher as investor confidence rose amid positive economic indicators. The surge was fueled by stronger-than-expected U.S. non-farm payrolls data, which showed employers added 115,000 jobs in April, substantially exceeding estimates of 65,000. The unemployment rate held steady at 4.3%, alleviating concerns about an imminent economic slowdown. Tech-heavy indices led the gains. The Nasdaq Composite experienced a sharp increase, opening 0.7% higher and extending its gains to over 1.2%, climbing above 26,100 to set a new all-time high, primarily due to the strong rebound in semiconductor and AI-linked stocks. The Dow Jones Industrial Average also saw gains, opening 0.45% higher and trading near 49,812.81, though it later pared some of its earlier gains. The S&P 500 also posted gains, opening 0.44% higher and later trading up approximately 0.7%, supported by performance in technology and communication sectors. Geopolitical optimism also played a role in boosting sentiment. Reports suggesting Iran is reviewing a U.S. peace proposal raised hopes for reduced tensions in the Middle East. Furthermore, falling oil prices provided relief, helping to ease inflation concerns and increasing appetite for equities, especially technology stocks. Chip makers spearheaded the Friday rally following previous session losses, with AI and semiconductor stocks rebounding strongly. The slight weakening of the U.S. dollar reflected cautious optimism regarding potential resolutions to the U.S.-Iran conflict. Despite improving risk sentiment in equities, investors remain focused on external factors. The short-term direction of U.S. equities will hinge on ongoing economic data, geopolitical developments, and the momentum of AI technology. Key factors to monitor include oil prices, Federal Reserve signals, and Middle East peace negotiations. Precious metals remained volatile, while Bitcoin showed relative stability, though crypto-related stocks experienced renewed buying interest. Noi Dung Kai Tight. The artificial intelligence revolution is fundamentally reshaping the semiconductor industry, establishing chips as the indispensable building blocks for everything from training large language models to running inference applications and managing massive data storage. This critical role is underscored by the dramatic performance of the PHLX Semiconductor Sector Index, which has surged by 273% over the last 3 years, significantly outpacing the S&P 578% gain. Market analysts predict robust growth, with Gartner forecasting the semiconductor industry's revenue to expand by 64% in 2026, reaching $1.32 trillion. This outlook signals a strong investment environment for semiconductor stocks, poised to capitalize on the build-out of AI data center infrastructure and edge hardware. /N spending on memory chips is set for a massive escalation, projected to jump from $216 billion last year to $633 billion by 2026, driven by the need to support AI workloads. Micron Technology and Sandisk are benefiting significantly from this trend. Micron, a key supplier of dynamic random access memory, DRAM, essential for AI accelerator chips, and NAND flash storage, is seeing exponential growth. DRAM, which constitutes 79% of Micron's recent top line, is in high demand, leading to an almost eightfold year-over-year jump in earnings for the company in the second quarter of fiscal 2026. /N meanwhile, the demand for storage in AI data centers is fueling Sandisk's success. The company reported a 251% year-over-year revenue increase to $5.95 billion for fiscal 2026 Q3. Strong demand has translated into substantial long-term commitments, with Sandisk securing 5 multi-year supply agreements this year, including contracts valued at $42 billion from just 3 agreements in the previous quarter. Experts anticipate Sandisk's earnings to increase by over 20 times in the current fiscal year. N Intel Corporation has also emerged as a major beneficiary of the AI chip boom. Despite initial skepticism, Intel's turnaround strategy is yielding results, evidenced by a stock price surge exceeding 5 times over the past year. The demand for its server central processing units, CPUs, is surging as they are deployed in AI data centers for inference workloads. Furthermore, Intel is successfully developing custom AI processors, with revenue from application-specific integrated circuits, ASICs, nearly doubling year-over-year in Q1, achieving a $1 billion annual revenue run rate. The growth in Intel's data center and AI, DCAI segment, which saw a 22% revenue increase in the preceding quarter to $5.1 billion, suggests a healthy long-term trajectory. With ongoing improvements in production capacity, Intel is well-positioned to meet the solid demand for its AI chips, sustaining its impressive market momentum.